90% of people who try to trade lose money, not because the market is hard, but because they have no clue what they're doing. And I know this because I was one of those idiots. But once I actually learned how Forex works, I stopped gambling and started making real money. And by the end of this video, you're gonna know exactly how to do the same without making the same stupid mistakes that I did. All right, so before we start printing money, like fucking savages, we gotta talk about what the hell even Forex is. I remember the first time someone told me about Forex, I was like, wait, you can trade money for more money? It's gotta be a scam. But here's the part no one tells you in school or in life. Forex is literally the act of trading one currency for another. That's it. That's the whole thing. It's not some dark web shit. It's not stocks. It's not crypto. It's not magic. It's just money versus money. You ever gone to another country and had to exchange your dollars for their money? Boom, you've already done Forex. Congrats. You're technically a trader now. Let me give you a stupid easy example. Let's say you fly your happy ass over to France. You walk into the airport like a baller, slap a crisp $100 bill on the counter, just like that, and exchange it for euros. Now, maybe the exchange rate gives you, I don't know, 90 euros. Cool. You go eat some baguettes, flirt with a barista, ride a bike, or whatever the people do in France. And then a week later, before you fly home, you exchange those euros back to the dollar. But now, because the exchange rate changed in your favor, you get back $105. You didn't do anything crazy. You didn't build a business. You didn't flip real estate. You just held euros for a few days and somehow you made $5. That's Forex. Now, imagine instead of doing this once a year when you travel, you do that kind of trade 100 times a day, but digitally. No airports, no baristas, just you and your phone. And instead of making $5, you make hundreds or thousands. And if you know what you're doing, that could be millions. That's what real Forex traders do every second, every minute, every day. They're watching those little shifts in currency values and capitalizing on them over and over and over again. Now, depending on what type of trader you are, will depict if you actually need to look at the charts every day, but we can do a different video explaining that on a later time. Because guess what? Currency values are changing all the time. Every second, somewhere in the world, something is happening. Politics, inflation, war, interest rates, and that makes currencies move. And when they move, that's your opportunity to step in, make a play, and grab your cut. Now, Forex isn't just some niche little corner of the internet. It's the biggest market in the entire world. I'm talking $7 trillion traded every single day. That's a trillion with a T, like government money type shit. And guess what? Most of the money is traded by the government, banks, hedge funds, and institutions. But now, with your little phone and a Wi-Fi signal, you can jump in too. You're sitting at the same table as the big dogs, and it's dangerous. But also, that's the opportunity. So don't overthink it. Forex is just trading money like a product. You're buying one currency, selling another, and making a profit off the difference. Simple. If you've ever traded a toy with your friend at recess and thought, damn, I got a better deal, you already understand Forex. Now, we're gonna do it with real cash. And I know what you're thinking. Okay, cool, I get what Forex is, but how do I actually make money doing it without blowing any accounts? Good question. That's exactly what we're gonna get into next. I'm gonna break it down so simple, your grandma could learn this while baking cookies. So here's the deal. In Forex, you're not just trading money like it's candy at a swap meet. You're trading currency pairs. Two currencies stacked up against each other, like a face-off, like two fighters in a cage. You'll see stuff like this. Euro USD, GBP JPY, or even USD CAD. Looks like a goddamn license plate, right? But it's just two different currencies. The one on the left is what you're betting on. The one on the right is what you're betting against. So if you see Euro USD, that means Euro versus the US dollar. If you think the Euro is gonna get stronger compared to the dollar, guess what? You hit the buy button. If you think Euro is gonna drop compared to the dollar, you hit the sell button. That's it. Two buttons. You're either riding the wave up or riding it down. Now, hold up. This ain't no coin toss. You don't just guess. This ain't Vegas. You're not putting your paycheck on black and praying to Jesus. That's what do. I know, because I was one of them. When I first started, I would literally stare at the chart, scrim eyes, and be like, looks like it's gonna go up. And then I'd hit buy with the confidence of a drunk dude proposing at a bar. And then 5 minutes later, price drops like a sack of bricks, and there goes another $50 down the toilet. I didn't have a system. I didn't have a clue. I was just hoping the market would be nice to me. And I'm gonna tell you, the market doesn't give a shit about your feelings. So here's what you actually need to understand. You're not just clicking buttons, you're reading the market. Like a story, the chart, that's your map, that's the battlefield. Every line on the chart is showing you what the market has already done. And when you understand what's done in the past, you can get a feel for what it's actually gonna do in the future. It's like watching a basketball game. If you see Steph Curry hit 3 shots from the corner in a row, you know he's probably gonna shoot from that corner again. That's a pattern. That's what traders look for. You're looking for patterns, movements, setups, shit that happens again and again. Because the market, despite being chaotic, are actually kind of predictable. Not 100% predictable, but just enough to make you rich if you play right. Let me give you a real example. One day, I saw USD JPY dropping hard, complete free fall. I thought, cool, it's crashing. I'm gonna hit sell and ride this thing all the way down. I jumped in, price kept falling, my account started going up, felt like I was on top of the world. But then out of nowhere, price reversed and it took a full 180. Started shooting up. I didn't have a stop loss. I didn't have a plan. So I watched my profits disappear in seconds. I went from hell yeah to oh in the blink of an eye. And that's when I learned it's not enough to be right. You gotta have a plan. Every trade needs a reason, a setup, an exit, a backup plan if shit just goes sideways. This is why most people lose money. They come into Forex thinking it's about being lucky. It's not. It's about being smart. You gotta treat every trade like a business deal. Would you go buy a car from Craigslist, throw $5 grand on the table and be like, I think this car might drive well? No. You'd test it, you'd research it, read reviews. Forex is the same. Every trade is an investment and every click better have a good reason behind it. So back to the question, how do traders make money? Simple. You find a setup, you analyze the pair, you decide, is this thing gonna go up or down? And then you place a trade based on that belief. If price moves in your direction, you make money. If it moves against you, you lose money. But here's the kicker. You control how much you win or lose. You set the risk. You decide the lot size. You set the stop loss. You're in the driver's seat. And more control you have, the less likely you are to crash and burn like a rookie. Now, let me break it down even more simply for you. Let's say you're trading Euro USD. You hit buy at 1.1000, that just means you're buying euros and selling the dollars. The price goes up to 1.1100, boom, you made money. How much? That depends on your position size. If it goes down to 1.0900, sorry, you lost money. But again, how much depends on how much risk you put on the trade. And don't get overwhelmed with numbers. Don't let all that jargon scare you. It's all just money math. If you can count to 10 and wipe your own ass, you can learn this. Forex is like a video game. At first, you're gonna fucking suck at it. You push the wrong buttons, you die a lot, you rage quit, but after a while, you start seeing the patterns. You learn the combos. You get good. And when you get good, you start winning and start leveling up. You start stacking cash. And that's the goal here, to turn you from a confused newbie into a trader who walks into the market with confidence, with clarity, and having a plan. You're not here to guess, you're here to get paid. So remember this, every time you place a trade, ask yourself, do I know why I'm entering this trade? Do I know why I'm exiting? And do I know how much I'm actually willing to risk? If the answer to any of those is a no, take a step back, because real traders don't gamble, they strategize. And once you learn to do that, you stop losing, you stop guessing, and you start building a money machine. Most traders lose money, not because the market is too hard, not because they don't have money, not even because they suck. They lose because they don't know how to read a chart and control their own emotions. They open up their trading app and all they see is chaos. Red candles, green candles, little lines sticking out at the top and the bottom of like a spaghetti noodle, and their brain just goes to mush. So they guess, they panic, then they click buttons based on feelings, and then they blow their account. But here's the truth. No one ever told me when I was starting out, the market is not random. It looks random, it feels random, but it's not. The market is a language. It's a visual story being told through price. Every single candlestick is a word. Every chart pattern, a sentence. And once you learn to read that language, this shit just gets a lot easier. Imagine trying to read a book in a language you don't speak. You just be staring at the letters like a dumb. That's what most traders are doing. They're looking at the charts, but they don't understand what it's saying. And that's why they lose, because they're trying to play a game they don't even know the rules to. So let me teach you the basics, and I mean really basic, because I want you to look at the chart and actually understand what the hell is happening. Even if you've never traded a day in your life, first things first, candlesticks. That's those little red and green bars you see all over your screen. Some are tall, some are short, some have lines sticking out of them. Those are candles, and each one represents what price did during a specific time frame. Could be 1 minute, could be 1 hour, could be 4 hours, could be a whole day. It doesn't matter. The structure stays the same. Now, when a candle is green, that means buyers were in control during that time. Price started low and finished higher. Green equals price went up. Buyers won that round. Very simple. When a candle is red, that means sellers were in control. Price started high and ended lower. Red, price went down. Sellers won. That's really all you need to remember. But it gets deeper, because every candle has a body. That's the thick part of the candle. And wicks, those are the little lines poking out from the top or bottom. Those tell you where the price tried to go, but got rejected. And that is pure fucking gold if you actually know how to read it. Let me give you a real life example. Let's say you're at an auction, some dude shouts, "I'll pay 100." Then someone else goes, "I'll pay 120." And then all of a sudden, nobody else bids. The crowd gets quiet. The price drops back to 100. That moment when someone tried to push the price up, but the market rejected it, that's a wick. Wicks are rejection. Wicks are momentum shifts. Wicks are like the market saying, yeah, we tried, but nah, not happening. And if you're paying attention to those little signs, you can get in before the big moves even happen. So when you see a green candle with a long wick at the top, it means price tried to go higher, but completely failed. Sellers stepped in and shoved it back down. That's bearish. That's a warning sign. Don't just jump in thinking it's gonna keep going up. You might get smacked. Now, reverse it. A red candle with a long wick at the bottom, that's price dipping low and then getting bought back up. That's bullish. That's a sign buyers might be getting ready to take control. Do you see what I'm saying? These aren't just colors. They're stories. They're telling you what the buyers and sellers are doing. Who's in control, who's stepping back, who's about to win the next round. You just gotta learn how to listen. All right. Now, let's talk about structure, because this is where most beginners really get lost. They stare at one candle, freak out, and hit buy or sell with zero context. But a single candle means jack shit if you're not looking at what happened before. You ever walk into a movie halfway through the film and try and guess what's going on? You're sitting there like, wait, why is this dude crying? Why is this building on fire? Who even is this guy? That's what it's like trading without understanding the market structure. You gotta zoom out, look left at what's been happening on the chart for the last few hours, days, or even weeks. Are we trending up? Turning down, stuck in a sideways chop fest? That context tells you everything. Traders make their best decisions when they stop focusing on the last 5 minutes and start understanding the overall story. That's when things click. That's when the chaos starts to make sense. Let me paint a picture for you. I was watching USD Chef one day. Market had been trading up for hours. Clean higher highs, higher lows, classic uptrend. Then boom, a fat red candle appeared out of nowhere. Most traders would see that and be like, a reversal, time to sell. But guess what? I looked left, saw the structure. That red candle was just a pullback, a tiny dip, and a strong uptrend. I waited for confirmation, then I bought her right back up. Rode it for 70 pips. If I had just reacted emotionally to that one candle, I would have gotten wrecked. But because I read the story, I made money instead of actually losing it. And that's what I'm trying to teach you. Don't react to the candles, read them, study them, zoom out, and ask questions. Who's in control? Are buyers in control? Are sellers in control? What do the wicks tell you? What's the bigger picture? And you don't need 100 indicators to do this. You don't need moving averages, RSI, MACD, Fibonacci, astrology charts, or any of that extra. All you need is price, candles, structure, context. That's it. Once I stopped relying on indicators and just started reading candles, my win rate shot up. My losses got smaller, my confidence grew, and trading stopped feeling like a damn roller coaster and started feeling like a strategy. Don't get me wrong, I use indicators sometimes. They can help you, but let's stick with the basics for now and get you understanding what really matters. So here's your takeaway. The market is a language, it's a story. Candles and characters, wicks are emotion, price action is the plot. And if you take the time to study that shit and actually understand what it's telling you, you start making smart decisions, profitable decisions, and you stop gambling and start actually trading. And if you really want some extra accountability, the resources are endless. Not only do I have a one-on-one group you can join, but we also have an amazing tool called Market Memo that not only tracks your trades, but holds you accountable every step of the way. I'll link those below. You don't need to be perfect, you just need to be clear. See the story, read the clues, make your moves with confidence, and if it doesn't go your way, cool, learn from it, but never again say, I didn't know what was happening, because now you do. So by now, you're probably like, okay, Anthony, I get what Forex is, I understand how the candles work, I can read the chart, but how the fuck do I actually use this to win trades? And here's where most people screw it up. They start searching for the holy grail strategy. They download 10 indicators, open 20 tabs on YouTube, start throwing words around like Fibonacci, Ichimoku, harmonic patterns, neural network, AI bot trading, like they're hacking into the fucking Pentagon here. Just stop, because I'm about to give you the simplest, cleanest, most effective strategy a beginner can use. And guess what? It actually works. No bells, no whistles, just raw proven results. This strategy, it's called trend trading. That's it. You trade with the trend, not against it, not against the flow, not trying to be a hero who calls the top or nails the bottom. You ride the wave and you actually get paid. When I finally dropped all the fancy shit and just started trading trends, my account started growing slowly, consistently, and most importantly, predictably. So let's break it down into baby steps. You ready? Go grab your juice box and pay attention. Step 1, find the trend. That means zoom out and look at the bigger picture. Is price moving up or is price moving down? Simple. You don't need to overthink it. You don't need a magic indicator to tell you. Just use your God-given eyeball. If you see the market making higher highs and higher lows, that's an uptrend. Buyers are in control. You're looking to buy the market. If you see lower highs and lower lows, that's a downtrend. Sellers are dominating. You're looking to sell. Easy, right? Don't complicate it. Trends are your best friend in Forex. You're either riding with the wind or running against it. One gets you paid, the other gets you fucked. Getting fucked isn't always bad though. Step 2, wait for a pullback. This is where patience comes in. Most rookies lose money here. They see price flying up and they think, oh shit, it's going up. I gotta jump in. And they buy at the very top. Like a and guess what happens next? Price drops, their stop loss gets hit, they cry, game over, wham, wham, wham. But a pro, he waits. He doesn't chase. A pro waits for a pullback in an uptrend. You wait for a price to come back down before buying. In a downtrend, you wait for it to bounce up a little bit before selling. You're waiting for a discount. Let me put it this way. If you see a t-shirt at the mall that normally costs $50, but now it's on sale for $30, do you buy it? Hell yes. It's the same in Forex. You want to buy cheap and sell high. So stop chasing price. Wait for the sell, wait for the pullback. Step 3, enter at support and resistance. This just means you're using the chart's old highs and lows to guide you. If the price is trending up and pulls back to a previous low, that's your support. That's your entry point. If the price is trending down and bounces up to a previous high, that's resistance. That's where you enter a sell. And don't get caught up in the word support and resistance. It's just fancy talk for where price turned around the last time. Look at where the candles reversed before. That's your key level. And now, most important part, step 4, set a stop loss and a take profit. This is where the get cleaned out. They go in blind with no stop loss, no plan, just vibes and positive thinking. And then they wonder why their account got nuked. You always set a stop loss. That's your emergency exit. That's the point where you say, if price hits this level, I'm out. No questions asked. It protects your money and it saves you. And you always set a take profit. That's your payday. The moment where you cash out and say, thanks market, I'll take my bag and leave. You don't have to be right 100% of the time. Hell, you could be right 60% of the time and still make money. As long as you're using stop losses and take profits like a grown adult. That's the whole strategy. No magic, no secrets, no just a clean, powerful plan that works when you follow the rules and keep your emotions in check. All right, now let's talk about the one thing that no one wants to talk about. Losing money. Because the truth is, most people who start trading, they lose everything. And I'm not talking about a couple $100. I'm talking about the whole account. Blown up, wiped clean, gone. And it's not because they had a bad strategy. It's not because the markets was mean. It's not because the universe was out to fucking get them. It's because they traded like an idiot. They got greedy. They got impatient, they overtraded, they didn't use stop losses, they doubled down on losing trades. They traded based on emotion instead of actual logic. And boom, count is gone, their dreams crushed. I've been there. I've made all of those mistakes. And let me tell you, it hurts. Watching your money disappear because of your own stupidity is one of the most painful lessons on earth. But it doesn't have to be that way. There are 3 golden rules that if you follow them will protect you from blowing up your accounts. These aren't suggestions, these are commandments. Carve them in stone, tattoo them on your arm, whatever it takes. Just follow them. Rule number 1, risk small. Never, and I mean never, risk more than 1 to 2% of your account on a single trade. I don't care how confident you are. I don't care if your grandma said it's a sure thing. You risk small, always. Rule number 2, always use a stop loss. Look, I know it's tempting to just see what happens, but that's how you wake up to a blown account. You always have a plan to get out if it goes south. The stop loss is your parachute. Without it, you're free falling with no way to land. Rule number 3, avoid overtrading. This one kills most traders more than anything. You win a trade, you get hyped, you jumped right into the next one. You lose a trade, you get mad, and you try to make it back immediately after. Either way, that's overtrading. That's emotion, and emotion kills in this game. That's actually why I love Market Memo so much, because it helps you control your emotion and track your trends. Trade less, be picky, only take the quality setups. The fewer trades you take, the fewer chances you have to fuck it up. It's not about how many trades you take, it's about how good they are. If you ignore these 3 rules, you're not trading, you're gambling. You're just another guy in a casino throwing chips and hoping for the best. And guess what? Gamblers go broke every single time. But if you stick to the rules, risk small, use a stop loss, and don't overtrade, you give yourself a real shot, a fighting chance. And over time, you start to grow. So take this seriously. Protect your capital like it's your damn lifeline, because it actually is. Without capital, you can't trade. And if you can't trade, you can't win. Discipline over dopamine. Rules over feelings. Patience over panic. That's how you survive. That's how you succeed. That's how you're gonna win.